Well, I think the biggest reason is interest rates coming down, inflation coming down, because the terrible performance in growth and innovation-based strategies over the last 18 months had been a function of expectations that interest rates and inflation would continue to rise, and that we are not. I think the bond market is beginning to lead the Fed. And yes, I do think we're not going to go straight up, of course. We don't want to go straight up. We want this to be much more deliberative in terms of investing. So yes. And new NASDAQ, this is an expression we've been using. We were trying to communicate last year, hey, our portfolios do not include the stocks in the NASDAQ for the most part, except for Tesla, perhaps. You know, the world is changing incredibly quickly here. And we're seeing this with AI, of course, all of the news around ChatGPT that's captured the public's imagination, captured business imagination. It's happening very quickly. And our portfolios are very focused on the future. The NASDAQ and other broad-based benchmarks are much more traditional. They are really the names at the top of those portfolios are the companies that have really done incredibly well over the years. But we think many of them will be disrupted. And we're seeing already questions about Google and search, and could Microsoft Bing disrupt Google? This was the former disruptor when it came to advertising and media.
Well, it's a great point. Everybody's talking about ChatGPT right now. But look, a lot of these names have gained year to date, but they had a horrible year last year, Tesla included. Would you be poised to lessen exposure to Tesla as you increase exposure to AI ChatGPT plays?
Well, actually, Tesla is one of the most profound AI companies out there. And that is why it is at the top of ARKK, ARKQ, ARKW has a big position in it as well. It is not an auto company. It is a technology company. And autonomous taxi platforms, we believe, are the biggest opportunity in the next 5 to 10 years out there around artificial intelligence. So just to give you a sense of that, Tesla right now, its gross margins are in the 25% range. That's electric vehicles. We think they're going up from there. But autonomous is a SaaS model. Those autonomous taxi platforms, and we think Tesla's in the pole position to be the platform, the primary platform in the United States, those gross margins will be in the 80% range. So we believe that our target price for Tesla, at least the published one right now, is in the $1,500 to $1,600 range. Wow. From roughly $200 today in the next 5 years. We have a 5-year investment time horizon. And we believe that a third of that, roughly, will come just from the electric vehicle scaling. I mean, we're in the sweet spot of the S-curve for EVs now. The rest of it will come from AI. And we think, you know, those looking for killer apps, that's probably the biggest killer app out there globally.
That it is part of your Big Ideas report. You released your Big Ideas with this AI contribution of Big Ideas. And yet, Cathie, a lot of these names are cutting jobs. We're seeing the effects of a macro story that is slowing. Look at Zoom, laying off 15% of the workforce. Companies preparing for what it's calling the uncertainty of the global economy. Even though it was up 17% year to date, we're also seeing layoffs across the tech industry. So how do you square that? In terms of the growth you're expecting, and yet these companies are all pulling it in while valuation seems to go up. Meta up 55% year to date.
Yes, a couple of things are going on. Many of these technology companies had to gear up to handle COVID, and they did. They did a beautiful job. I mean, Zoom, what it did, going from 20 million users to 200 million users in a year to 18 months. The technology to accommodate that, being able to do that was probably one of the greatest technology feats we've seen in quite some time. And of course, now we're seeing the opportunity with AI for productivity gains. That's one of the primary opportunities associated with AI for traditional companies. And so we think companies need to increase their productivity, and maybe they went a little bit too far hiring as they were trying to address all the needs that COVID presented. So we don't think this is the technology sector, in some kind of disarray or sunsetting in some way. Quite the opposite. We think they're harnessing new AI tools and other technologies to increase productivity and provide new products and services. One, a cryptocurrency SMA, separately managed account, and another, a crypto asset, because we believe this new asset class is going to be incredibly important in terms of transforming the world, but also diversifying portfolios.
Yeah. Cathie, all of this is reliant on the idea that inflation does, in fact, come way down. I know you were expecting inflation to come way down last year. It is off of the highs, but you look at things like food. I mean, dozen eggs up 60% year over year. You look at things like rent near record highs. What's your take on the Fed in terms of higher rates this year and stomping out inflation?
Well, I think, as I mentioned, I think the bond market is seeing something a little different from what the Fed and maybe what we're seeing from food prices and so forth. If you look at gold, the gold price, which I think is a very important price in terms of people flocking to it for inflation hedge, it peaked way back in August of 2020 and is a leading indicator. If you look at oil on a year-over-year basis, we're down 18%. So I think commodities are pointing us lower, and the bond market believes it.